When will direct tax code be implemented, and will CMAs be allowed tax audit under the income tax act? That voucher is supply, voucher is supply, voucher is supply. So now sale of voucher is termed neither as supply of goods nor as supply of service. So what? Hello and welcome guys, and welcome to this short vlog. And yes, the direct tax and indirect tax proposals are out for the budget 2025, and a couple of amazing amendments which are underway for the direct and indirect tax in the country. And yes, absolutely a revolutionary budget which Nirmala Sitharaman ji have presented. And in a decade, in last 10 years, I have never seen such a radical budget, such a budget which is absolutely favorable for definitely the middle class, because the only complaint against this current finance minister was that she was not doing anything for the middle class. And yes, bang on, she has done really amazingly well. She's given some good steps, she's given some good recommendations and proposals for the benefit of the middle class. So yes, this budget is really a dream budget, so to say, a budget which really enhances purchasing power of common man. Before I start discussing the proposals, guys, this video is not relevant for the students who are giving their examination in June 2025 and December 2025. For them, budget 2024 will be applicable, and I will be coming up with a detailed video regarding all the amendments which have come in the last budget, which is 2024 budget, which is relevant for your examination. So if you have June 25 or December 25 examination, all the CMA students, please note, this video is not applicable for your examination purposes. Yes, for your knowledge purpose, you can watch this video and really enjoy the benefits which Nirmala Sitharaman ji is offering to all of us, to the people of the entire nation. So I have bifurcated my discussion into two parts: key tax proposals with respect to direct taxation, key tax proposal with respect to indirect taxation. So first I'm going to start with the direct tax rates. So yes, a radical amendment in the direct tax rates, not for corporates. For companies, there's no change, but for individuals. And amazing step towards increasing the purchasing power of the middle class. Guys, if you are an individual and having an income of up to 12 lakh rupees, you don't have to pay a single penny of tax. It's a beautiful move, and it really enforces or infuses confidence in middle class that yes, government is with us. So the proposed tax slab, which is this, is really a radical change than the current tax slab. So we are talking about the new tax regime, and now, sorry to say, old tax regime will rest in peace. After this amendment, the old tax regime will definitely rest in peace. I'm saying this because old tax regime now will not be beneficial for most of the individuals, for most of the people. Old tax regime will not be beneficial, and the only beneficial thing will be the new tax regime. So now new tax regime will be the future, and yes, the government is ensuring that we make new tax regime so lucrative that no one in the country touches the old tax regime and those archaic investment forced investment strategies. So the government is absolutely clear: it's your money, spend it the way you want, not for tax benefit. You are for applying for deductions under section 80C 80cc, you are investing in some particular monetary or financial instrument. No forced investments to be imposed by government of India. You are free to choose wherever you want to invest your money in. So old tax regime with its old deductions, with its old forced investment, is now archaic, is absolutely old now, and new tax regime is the future. So this is how the tax rate in new tax regime looks like. And yes, up till 12 lakhs, the tax which is proposed to be charged from you is zero. Sir, tell us one thing. Many students are asking me, who are probably new to tax. Sir, tell us something. You are saying up till 12 lakh rupees there is no tax, but then why these tax rates are there? Students are asking me, sir, up till 12 lakhs you're saying there's no tax rate, there's no tax, then why these tax rates are there? Guys, these tax rates are relevant for people who are having their income above 12 lakhs, because those who are having their income above 12 lakhs, they still have to pay tax, up to 12 lakh rupees. the tax is only exempt for those people whose income is below 12 lakhs. Like if your income is 10 lakhs, then your tax is zero. If your income is 16 lakhs, then you have to pay tax up till 12 lakhs also. And this is the tax which is proposed for those people whose income is above 12 lakhs. So they have to pay tax up till 12 lakh also. So if your income is above 12 lakhs, you cannot say that. So our income up till 12 lakhs is exempt from taxation. No, guys, that is not the interpretation. But yes, still, even if your income is above 12 lakhs, then also there's a major shift in the tax brackets, and therefore you stand to gain, at least better than the existing new tax regime, tax slabs. And where does this 12 lakh fundamental come from? Which section says that up till 12 lakh there is no income tax? Of course, it is section rebate under section 87A, which proposes that it is applicable on income up to rupees 12 lakhs. Up to rupees 12 lakhs, your income is exempt from taxation. It is said in a rebate under section 87A. So this is the section by virtue of which if your income is above 12 is below 12 lakhs, then you have no taxes. Okay, so up till 12 lakhs, no taxes, you get a rebate under section 87A. Now, my question to all of you, to all of the students of CMA, let us see who has studied direct tax really well. My question to you is, and answer in the comment section below. I will be replying to your answers. Is this section 87A, the rebate under section 87A, is it applicable to residents or non-resident? That's my question to you. Please answer in the comment section below. Okay, so this was the most radical and most vibrant amendment, which really excited me a lot, because directly the tax slab was increased, and many people whose salaries are below 12 lakhs, they have come out of the tax net, and it's an amazing a step. One very interesting thing. So people whose income is 12 lakhs 75,000 actually comes below the tax slab. Why 12 lakh 75,000? Because standard deduction is also enhanced from 50,000 to 75,000. So if your income is 12 lakh 75,000, you'll get a reduction of standard deduction 75,000. Then your income becomes 12 lakhs, and that is entirely exempt. So the exemption is not for people who have their income as 12 lakhs. It's for the people who have their income as 12 lakh 75,000. So that is the biggest change in today's in yesterday's budget, which Nirmala Sitharaman ji has presented. Next, rationalization of TDS and TCS provisions. Ease of doing business has forced government to really take radical steps towards easing out, or towards reducing the complexities which are there in tax laws. So TDS and TCS, both there has been some changes in both these regimes. Withdrawal of TCS on sale of goods. Provisions under section 206C1H of the Income Tax Act relating to collection of TCS on sale of goods exceeding 50 lakh rupees have been proposed to be omitted. So, a couple of years back, there was a TCS which was proposed to be inserted for the sale of goods above 50 lakh rupees. Now it has been abolished. So that's a good move to, ease out the burden. Rationalization of TDS sections has resulted into increasing threshold of the TDS sections, and here in this table I have jotted down all the changes. So payment of interest on securities, there was no current threshold, but it has been proposed that below 10,000 no TDS reduction is required. Payment of interest other than securities 194A, the current threshold is 5,000. Now the threshold is 10,000. Similarly, for dividends, the threshold has been increased. Commission brokerage 194H, the threshold has been increased. Rent by other than individual 2,40,000 has been increased to 50,000 per month or part of the month. So that is the change which has been brought by. Payment of fees for professional technical services 30,000 has been increased to 50,000. So yes, everywhere it is being ensured that the small businessmen who are really making who have their small turnover, who have their small plant and machinery investment, equity share capital is also small, they are not harassed much by the difficult tax provisions. So that is the aim by which the thresholds have been increased for TDS. All right, so proposal of tax TDS at higher rate for non-filers of return of income. People who do not file their return of income, for them the TDS rates were higher, which were proposed under section 206AB, 206CCA. This has been abolished. This has been omitted in the current finance, proposal budget. Return of income. Yes, there was an advent of another return of income, which was known as the updated return. And this is actually a return which proposes to regularize the income tax filings for people who have not filed their return or who have underfiled their return, who have a lot of cash income, but they have not disclosed it to Government of India. This is an opportunity which is given to those people to furnish their income to Government of India and pay an additional tax. So it's like a penalty that government is taking from you, but it will regularize all your income which you have not disclosed in your earlier returns. So now a very important step has been introduced under this particular section. Section is 139(8)(a), the updated return. The time limit for filing this return has been further extended to 48 months. 4 years. So up till 4 years, you can file your updated return, and up till 4 years, you can actually disclose your undisclosed income, or if you want to regularize your income, you will be given a time frame of 4 years. So extended timeline for you if you want to regularize your income. If you have not disclosed your income earlier, disclose it now with confidence. Yes, penalty is there. A heavy penalty is there. 60% of the aggregate tax will be additionally charged from you, and 70% of the aggregate tax will be additionally charged from you. But still, at least your fear of getting a notice from the income tax department will end. Okay, that is the benefit of this particular section. So these were the tax proposals for direct taxation, and now I come on to the indirect taxation. And guys, unbelievable, amazing. I mean, you love these amendments which have been come by in the indirect taxation proposals. These propositions are so thought-provoking that you'll love it. And mind it, I have not been able to cull out all the provisional changes because it's time consuming, and it takes a lot of time, but I have culled out all of the provisions which will be relevant for you, which you will be able to understand easily, and I've tried to cull out those interesting amendments for you. And these are one of the most important interesting amendments that have come by in GST law. All right. First of all, I'll talk about vouchers. If you remember, section 13(4) and 12(4), okay, talks about vouchers. Vouchers which are given by which is purchased by someone and gifted to someone else. That's voucher, right? And the law regarding time of supply of vouchers was that vouchers will be taxable if the goods which will be purchased from these vouchers are ascertained at the time of sale of voucher. Then time of supply is when the voucher is sold. When the goods are unascertained, when you don't know which good are you going to purchase from this particular voucher, then the time of supply of vouchers will be the time when the vouchers will be redeemed. These were the two provisions which were there in section 12(4) and 13(4) with respect to vouchers. Now there's a radical change in law, guys, and the law says that supply of voucher is neither a supply of goods nor a supply of service. So time of supply with respect to vouchers, the section 12(4) and 13(4) have been omitted. So now sale of voucher is termed neither as supply of goods nor as supply of service. So what will happen on sale of voucher? Now, whenever the goods are sold at a later point in time, whenever the vouchers are redeemed, whenever the goods are sold, at that point in time, we'll say that supply has happened. Because when the vouchers are sold, there's neither a supply of goods nor a supply of service. So supply of voucher is not a supply at all. At all. That is the radical change which has been introduced under the GST Act. Time of supply provisions for voucher are omitted since vouchers are neither supply of goods nor supply of services. So it's a very radical change. Now you laugh at it. So we have really put in all our efforts to brainwash or to infuse this thing in our brain that voucher is supply, voucher is supply, voucher is supply. And if voucher is of ascertained goods, then it will be a time of supply will be sale of voucher. And when it is for unascertained goods, then the time of supply of voucher will be when it is redeemed. So we have mugged up, we have infused this concept in our mind so strongly that now to delete this concept from from our mind will be really difficult. Why is law does this with us? So guys, law is all about unlearning, learning, and unlearning, learning, and relearning. Law is all about evolution. Law is evolution. And another beautiful example of evolution, I'll demonstrate in my next amendment. So there's another amendment in GST which has come in section 17.5D. 17.5D. Let me read the section first of all for all of you. This is the section, if you remember, section 17.5, which talks about the block credit cases where ITC will be blocked. Cases where ITC will be blocked. So the section reads as under: goods or services or both received by a taxable person for construction of an immovable property, ITC will not be available. So if you are constructing an immovable property, like I'm constructing my house, I'm constructing my office, I'm constructing a mall, I'm constructing a any kind of a office or a commercial space, ITC which will be available to me will not be allowed as a deduction. I will not be able to claim ITC for the goods or services purchased for construction of an immovable property. This is a law, and we have been studying it in intermediate and final, and we've been all through going through this particular law. Now, the controversy arises with the bracket which is given along with this section. The bracket says, other than plant or machinery. Earlier, the bracket used to say, other than plant or machinery, which means if we have taken some goods, if we have taken some services which are used to construct a plant and machinery, then the ITC will be allowed. If the ITC is available for constructing a building, it will not be allowed. This was the earlier interpretation, right? So ITC on plant and machinery, construction of plant and machinery allowed. ITC on construction of building not allowed. Okay, that was the interpretation which we used to say. Now came a Supreme Court judgment. Supreme Court ruling in the case of Safari Retreats, very recent ruling. It came in 2024, and if I'm not wrong, October 2024, a Supreme Court ruling came in, which said that please observe the words which are written in the section, and the words which are written in the section is plant or machinery. It is not written plant and machinery. The amendment has been done just now. The proposal has been done just now. Okay. Earlier to the amendment, the word read plant or machinery. Plant or machinery. And Supreme Court interpreted this plant or machinery as plant means. What do you mean by plant? Because if you, now I'll tell you the difference. If you say plant and machinery, then they are in conjunction with each other. They are together. If you say plant or machinery, they are two separate words. Plant is different. Machinery is different. That's the difference between English of the earlier law versus English of the current law. Okay. Earlier it said other than plant or machinery. So if it's a plant or machinery, then we are going to claim ITC credit. And what did Supreme Court say? Supreme Court said plant means plant taken separately. Please exclude machinery because the word is or, right? So plant means land, building, machinery, apparatus, fixture employed in carrying on trade and other industrial business. Plant doesn't only mean those machineries, those heavy machineries which are working for production process or manufacturing process. No, plant would also mean any kind of building which is used for my commercial. So if my office is there where I'm taking my classes, that's also plant for me. At least for a teacher, a faculty, that is my plant. My plant is my studio. This is my plant. This studio, this office is my plant, right? This digital board is my plant. This camera is my plant. This laptop is my plant. Okay, everything is plant, right? So Supreme Court said that the malls, when malls are being constructed by a real estate agent, or when real estate agent is making a building for selling it further to people, or when a commercial building is taken over by or is constructing by someone for its office, like I'm constructing my office, that commercial building is a plant for that particular person, and exception includes plant. And hence all the malls, all the commercial buildings which are taken on rent for official purposes, ITC should be available for even if they are building. This was the verdict of the Supreme Court. Just because of one word, one mistake in law, and everything goes for a toss. One mistake in law. The word written was or. It segregated plant from machinery, and it included building in the definition of plant. But now the law has been amended. Law has been amended. This amendment overrides the Supreme Court case. The law has been amended. Now the phrase plant or machinery has been replaced with plant and machinery. And now we are saying that only ITC available is for construction of plant and machinery. Now, sir, amendment has come in 2025. Supreme Court has given case in 2024. Then how can this amendment be applicable on that Supreme Court case which is already decided? Guys, the reason is there's a retrospective amendment. Retrospective amendment means this amendment is valid from July 1st, 2013 when GST came. This is a rare occasion when retrospective amendment comes in law. This is a rare occasion. But yes, this occasion is there and we are here to evidence this historical amendment. Amendment has taken place from 1st July 2017. So now the Supreme Court verdict which came in October 2024 is overruled. Supreme Court verdict comes to an end. And now all the malls, all the offices, all the commercial establishments which are being constructed for doing business, ITC is not available for them. ITC is not available. ITC is only available for plant and machinery. ITC is only available on plant and machinery. So just a small slip out in law and everything comes to a standstill. Confusion creeps in, and apex court like Supreme Courts give a judgment, give a decision like plant or machinery versus plant and machinery, and they interpret it in a different way because plant or machinery means plant and machinery are different from each other. So guys, this is the exciting part of studying taxation, and this is the exciting part of teaching taxation. These amendments can actually erase off all your preconceived notion about English language, and they change your notion. This is the beauty of taxation world. Okay. Okay, all right. One more very important amendment in GST. The amendment is with respect to section 34.2. Okay, 34.2 section allows reduction in output tax liability in case of credit notice received. So I'll give you an example. Okay, this is a supplier, this is a recipient. Okay, supplier furnishes goods worth rupees 1 lakh to the recipient. Okay, subsequently the amount of the invoice was also raised on the recipient. Okay, now subsequently and yes, GST is also paid on this particular amount. Subsequently, a credit note is received from the recipient. The supplier had agreed some sort of a discount to the recipient on achieving of some milestone that was achieved. So a credit note was subsequently issued, and the liability was reduced from 90,000 rupees to from 1 lakh rupees to 90,000 rupees. So 10,000 rupees worth of liability was reversed, and correspondingly the outward tax liability on 10,000 rupees would have been reversed. Outward tax liability on 10,000 rupees should have been reversed. So this reversal is permitted under section 34.2. Now a very important sectional amendment has taken place, and it says that this reversal is not possible unless and until the ITC which is taken by the recipient is also reversed. So you reverse the ITC also, and along with that reversal, you can claim reversal of output tax liability. Plus, if the incidence of tax has been passed to another party, so if the entire burden of indirect tax has been passed to another party, then no reduction is possible. No reduction in tax liability is possible by the person who's claiming the output tax liability. Okay, so this is a procedural amendment. Okay, this is a normal amendment, which is a procedural amendment, and yes, so that's it from my side for this particular budget, guys. And yes, I'm still in the process of analyzing the entire budget. I will come up with more such short videos with respect to amendments wherever I find a substantial change in law and substantial amendment which is on the way. And yes, one very important question, sir. When will direct tax code be implemented, and will CMAs be allowed tax audit under the Income Tax Act? The question to this particular answer is an affirmative. Guys, our Honorable Finance Minister has proposed that probably in the next month itself, she will be, no, not next month, next week itself, she'll be, presenting the new tax bill before the houses. And yes, it can soon be a reality that CMAs will be given a chance to conduct tax audit under the Income Tax Act. will soon be a reality. Soon as the new bill is passed, soon as the new bill is released, we'll be able to see this change, and hopefully it does, it happens soon. Hopefully it happens soon. On that positive note, all the very best, and please do mention your comments in the comment section below. If you want any other detail of any other amendment, then also comment in the comment section below. All the very best and happy studying.